Hey everybody, Smart Silver Stacker here. Hope you're doing well. Nathaniel Mayer Rothschild once stated, "The time to buy is when there's blood in the streets." Well, what does that mean? Well, it means buying when others are selling, scooping up unloved or possibly even hated assets at prices well below their true value, at a time of low sentiment among markets and investors. And at this moment, you would be hard-pressed to find a sector with worse sentiment than the precious metals. At a time when paper assets and major stock indexes are hitting record high after record high, gold and silver are, to some extent, languishing. Weakening demand and negative sentiment for physical precious metals is reflected quite clearly in the declining premiums that dealers are charging for coins, bars, and rounds. Remember last March when the U.S. banking system appeared on the verge of collapse? When premiums on U.S. silver eagles soared to, in some cases, more than 100% over the spot price? Or how about junk silver? If you could find it at all, bullion dealers were charging somewhere between 50 and 60% over spot for whatever limited inventory they had. What a difference a year makes. Today, coin shop shelves are stocked, U.S. silver eagles are selling for a few bucks over spot, and dealers are running promotions and sales on 90% silver half dollars. Stackers are throwing in the towel and in some cases selling their physical gold and silver. Premiums have collapsed as dealers attempt to entice buyers and move product. Now, you tell me, when is a better time to buy? When premiums are low or when they are high? Leave me a comment down below to let me know what you think. But if you're looking for a sector in which sentiment is currently even lower than in gold and silver themselves, one does come to mind, and that is the companies that explore for the precious metals. We'll take a look at some charts in just a moment to examine just how cheap the miners have recently become. And I'll explain why, in my view, these assets are clearly unloved. Sentiment is in a ditch, and yet the fundamentals remain strong for the metals and the exploration companies. It's exactly the type of scenario Rothschild described in his infamous statement on value investing. And today I've partnered up with a sponsor, Callinex Mines Inc, OTC ticker CLLXF, to tell you about it. More on them later. First, I just want to say this video, it isn't financial advice, and buying when there's blood in the streets isn't for everyone. It's an approach that requires conviction, patience, as well as some significant risk tolerance because, of course, even when the price of an asset has fallen considerably and investors are pricing it below its real value, that doesn't mean the price can't fall farther. On the other hand, it is pretty great to have the opportunity to buy assets at fire sale prices, especially when that sale is being driven by investor misconceptions. More than one fortune has been made by taking advantage of an irrational market and buying undervalued assets for pennies on the dollar when investor sentiment is in the doghouse. Now, don't get me wrong. There is still some demand for true safe haven assets. For example, central banks around the world, they continue to load up on gold. But as I mentioned earlier, collapsing premiums on physical gold and silver bullion in the U.S. reflects a diminishing interest in the metals among retail investors. What I'd like to examine now, though, is just how much worse the sentiment is towards the gold and silver mining sector by taking a look at some charts. Let's start with the chart of the GDX, the VanEck Gold Miners ETF, which has been getting absolutely clobbered. Right now, the GDX is valued just over $26. To put that into context, this is the same valuation that these miners had back in October of 2016. At that time, the price of gold was around $1,300. Compare that to today's gold price, over $2,000, and you can see what an incredible discount these miners are currently trading at. It's the same story for Newmont Mining, the world's largest gold mining company. The share price has plummeted from 2022 highs of over $85 to today's price of just over $30. Again, the last time the share prices were this low was in May of 2019 with gold under $1,300. Clearly, this is a blood in the street situation for the entire sector. But why are the miners coming under so much pressure lately? It must be that investors anticipate lower prices for the metals in the future and therefore are pricing in lower earnings for the miners moving forward. And if we want to find out why they believe this, we can get a clue from the recent release of January's hotter than expected inflation data. The CPI came in above expectations, and the miners sold off in a hurry. But how could that possibly make sense? Shouldn't investors understand that higher inflation means higher future prices for gold and silver? Perhaps, unless of course they are under the false impression that the Federal Reserve is fully committed to and capable of doing whatever is necessary to defeat inflation. Meaning no more rate cuts, no more easy money until inflation shows clear signs of resuming its decline, just as we've been told will happen by central bankers and political elites. The problem is that clearly, current Fed monetary policy isn't nearly tight enough to control the inflationary forces that have been unleashed by more than a decade of near zero interest rates and trillions of dollars of debt monetization in the form of quantitative easing. That's why inflation continues to remain well above targets, and also why we are seeing new asset bubbles forming in sectors such as artificial intelligence and cryptocurrency. That's my take anyway. What tighter monetary policy and higher rates has been able to accomplish, however, is a commercial real estate disaster, a regional banking crisis, and a surging cost to service the U.S. national debt to the tune of more than $1 trillion annually. When one or more of these crises reaches a tipping point, the Federal Reserve will be forced to ease monetary policy. When this occurs, my forecast is that investors are going to be in for a rude awakening about how bad inflation is really going to get and just how little the Fed is actually capable of doing to fight it. Gold and silver will see a surge in demand when this plays out, and I believe that those who bought when there was blood in the streets will be rewarded. When it becomes clear that gold and silver prices, as well as prices for just about everything, will be headed higher probably for years to come, sentiment towards miners is going to adjust accordingly. The moves in this sector have the potential to be huge, to say the least. Gold and silver explorers offer leverage to the price of the metals themselves, and none more so than the junior companies, such as today's video sponsor, Callinex Mines Inc., OTC ticker CLLXF. Before we really dive into this company, I want to go ahead and take a look at its chart and some of the moves it's made in the recent past. This will help us to get an idea of just how significant the moves in a small cap metals company can be. Now, the first thing you'll probably notice from this chart is volatility. And while that does mean greater downside risk, it can also mean disproportionate gains, such as when Callinex went on an absolute rip and moved from a bottom in August of 2019 of 25 cents to an intraday peak of more than $5 in February of 2021, a greater than 20x gain. It is true that past performance is no guarantee of future results, and of course, it's nearly impossible to time markets perfectly. You won't buy at the very bottom or sell at the very peak every time. But with moves of that magnitude, you don't really need to. However, I think it is safe to say that blood was in the street for this stock in 2019, and those who bought then did pretty well. Callinex Mines has clearly been affected by the recent negative sentiment toward the miners, as the share price has fallen from a peak in April of 2023 of $4 to today's price of just 96 cents. What has gold done during that time period? Well, it stayed almost exactly the same. So it's another example of how much investors are discounting the miners relative to the metals. Now, a bit more about the company itself. Callinex Mines' mission is to expand high-grade copper, zinc, gold, and silver discoveries within the Flin Flon mining district of Manitoba, Canada. And that's something that this company really has going for it. A lot of miners out there are operating in jurisdictions where there is a constant risk of strikes, nationalization, regulation, and just general interference from the local government and populace. Not so in Manitoba. This is one of the most stable and mining-friendly jurisdictions around, as the government depends on miners for tax revenue, and the local populace depends on mining jobs. Miners, of course, do entail many additional risks that stacking physical gold and silver do not, so it's always a positive if any of these risks can be mitigated, such as jurisdiction. Another risk you can avoid with Callinex Mines is debt, as the company is debt-free. There is also an element of diversification because Callinex's deposits contain base metals including copper and zinc, in addition to gold and silver, such as the Rainbow deposit, first discovered in 2020, which has emerged as one of the highest grade copper deposits in the world based upon results so far. And that's one good thing about an exploration company like Callinex Mines. Future discoveries are not entirely priced into the current share price, and so better than expected results or new deposits can really move the share price. Finally, this is a tightly held company with management and associates owning more than 23% and institutional investors holding 45%. So more than half of the company is held by shareholders who want to see the full vision play out. So look, don't buy this stock or anything else for that matter just because you heard about it here. Make sure you always do your own extensive due diligence. And a good place to start is Callinex Mines' website, callinex.ca. There's a link down in the description. And if you ask me, the mining sector is worth taking a look at if what you are looking for is some additional risk in exchange for greater upside potential than the physical metals themselves. Let me know what you think in the comments down below. Stay safe and happy stacking, everyone. Smart Silver Stacker, out.